General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's see what's really going on. It could be like the market's not caring about the war. We had PMI today. I believe that was good. Grab my screen grabber. Okay, yeah, that was today. PMI came in good. Existing home sales came in good. Tomorrow, Powell testifies. No red folder besides that. And I don't expect him to say anything crazy. Powell at 10 a.m. I don't expect him to say nothing crazy. Lots of stuff going on in the back channels of more and more FOMC people are like, oh, we can cut rates now. That's kind of like the growing sentiment. Right here we're at 79%. No change. So it went down just a tad bit. Sentiment for rate cuts went down a tad bit. Earnings, I know it's nothing significant this entire week. It's almost the end of the quarter though, so we got earnings coming back up not too far from now. Let's see, after FedEx close, FedEx, boom, boom. Okay, nothing that will move. Nasdaq significantly. Let's look at the dollar on a daily. I think we hit our internal range liquidity target. So here we got our wick, and we got serious displacement lower. So this is actually next on the menu. We want to close through this. That's the next goal. For here, this could be Monday high of the week for the dollar. Since we completed grabbing internal range liquidity, we should leave this level and create a new dealing range lower. So retracements are allowed and continuation sell off. Nasdaq today. Gap down, but we opened up. Oh, I moved something. There we go. I think that's I think I know what that is. It's like an old weekly high or something. Okay, so gap down from war shock, and we rallied all day. Ultimately ending back up around EQ of the old range. So we can hold here and not do anything exciting unless news triggers a reaction. Very news driven market. Now, look, we came back to previous month's high today. This is the first day of the week. Look how big Monday is. Look how big Monday is. We could use this as high of the week. No liquidity has been grabbed. Oh, let's note that. No, we swept previous week's low liquidity overnight. Okay. Look what we opened at. I'm going to keep note of this here. Any liquidity here? This swept liquidity. These highs are doable. No need to put no lines on them. Offsetting above this makes sense though. I think next stop, old daily high, and look for a reaction. We got a lot of bearish SMT over here. Yes, grab this, but it didn't grab this. Okay, let's say the old swing highs still look doable for tomorrow. No significant sign of reversal yet. Reversal just yet. So wait for either a retracement to buy up or a raid to go down. Too many spaces here. H1. I'll say here first. We do have I would say a zone here, but this did its job. This did its job. This is our low hanging fruit. We really don't have to run none of these. I feel like it'll be more stops right there. But this is the path of least resistance. I don't like how we're wicking here. I do kind of like how we retraced back to the open price of the day and pushed up. That kind of covers that. It doesn't cover this sweep that we got overnight in regular trading hours. So this doesn't exist in. regular trading hours. This is electronic trading. So going up here, parent orders, then back lower makes sense. Let's make this one white because I already got a red tag there. 22, 127.50. Let me add an alert here. Call this old daily high. Hit. Targeting old daily high. At 22, 127.50. Alert set at the high. 200 sales. Let me take a look at EU, see if we're going back up. We took this. We didn't take this. Let's see the daily. I don't like how we came there. I was almost to my target. Oh wait, that's one crazy month. But this month itself is a flat bottom. It's inefficient. So we can wait and then catch the turnaround. But ultimately, this is going higher. Dollar's just going crazy. This will be a monthly fair value gap. Weekly kind of look choppy. That's that flat bottom. Take this off. Yeah, it's using an alert. Take it off still. Yeah, not chasing this. We even got this here. Just the open price of the week. I'm gonna put alert on that. Fair value for buying EU. All right, that's all I wanted to see today. Y'all have a good day. Peace.